Disclaimer: the information provided on this podcast is for informational and entertainment purposes only and should not be considered as financial advice. We are not licensed financial professionals, and any opinions shared are based on personal experiences and research. As always, do your own due diligence and consult with a certified financial advisor or professional before making any investment decisions. Welcome back. All right. So sorry for the delay in the video. It's been a crazy weekend with work and everything, kids' sports. So, I definitely wanted to get a video out this week. So this video is really going to be about having more than one account, whether it's through the same bank or whether if you have a different bank or credit union. So we'll go over the benefits and the security that you can have with having multiple accounts. I know it sounds crazy because you're like, well, more accounts come with more risk. Yes and no, which we'll kind of go over in the video. But first, you definitely just want to make sure that, if you're going to have multiple accounts, look for accounts that doesn't have fees associated with the account, as in just having the account. A lot of banks will charge you a fee for just having the account. Me personally, I prefer credit unions over banks. Now, it is a little harder to go to like branches and things like that with the credit unions compared to banks. Banks are much larger than credit unions. But with digital banking and with everything you can do on your phone now, I have a credit union and I've probably been there 3 times in the past 6 years. So, realistically, I don't really need to head to the branch. Because with the credit union, it does have more limitations on what you can do with your money. The banks, they're for profit, where credit unions are nonprofit. So they have to put limitations on how much you can send out at a time compared to banks. But I like that security that the credit unions offer more than the bank. So that's why I personally go through a credit union. But we can go over that in another video, but here we're going to take a deep dive into why I think you should have multiple accounts and why it can help you through your financial journey. 3 reasons why you should have separate accounts. Again, whether it's through the same platform, different banks, same credit unions, whatever. 1, it gives you visualization. So with the visualization, you can actually go in and nickname your accounts. I'm pretty sure 98% of banks will let you go in and nickname your account. So when you nickname your account, you can nickname your account as personal, and then you can nickname the other one as Bill. How many accounts you want, that's up to you. Now, me personally, I would do research on the banks that I want to bank with or credit unions I want to go to, because I want to see who offers what. Me personally, I like free accounts. I don't want to pay to hold my money into an account, which is why I prefer credit unions. With membership with credit unions, it's a little hard to get into because a lot of the credit unions have certain eligibility requirements that you have to meet. But again, you just have to do your research on that in your area to see what credit unions that you're eligible for. But a lot of credit unions may not charge you to actually have an account because they're a non-profit organization. So with the credit union, what I personally like is that I can have multiple accounts and not get charged a fee on any of my accounts just for stashing my money there, compared to a lot of banks who will charge you that fee. So then it's going to be organization, right? So with the organization, you can, stack your accounts how you want to. Again, you can nickname your accounts how you want. Whatever makes you, whatever works best for you is what you're going to end up doing. And the last is going to be security. So the security part, it's okay, let's break this down, right? So if I have my bill account, I have my personal account. If I have both my accounts merged into one account where my bills and all my entertainment expenses are coming out at one, I'm opening myself up for more risk because I'm going through certain merchants and certain restaurants, gas stations that I can get a skimmer on. Someone could get my information. There could be a data breach, whatever, right? There's thousands of ways someone could get access to your card or to your account. So what happened with me is I did have another account where it did get hacked, but they were only able to get $5. So basically my bills kept moving. I didn't have to worry about calling merchants all morning. I didn't have to worry about the stress of when I'm going to get my money back, because these fraud claims don't just take overnight. They take days, sometimes up to months, depending on the complexity of the claim. So what I do is I limit my risk of swiping my debit card through my bill account because I don't carry it at all. So I don't carry my debit card. I have my debit card linked up to some of these billers because I'd like to have it come out instantly. But whether if I have my debit card or my checking and routing number set up to that account, to me, it doesn't matter when it comes out because that's set aside already. So when it comes out, it comes out. It's just going to come out on its due date because it's on automatic payments. Now, if someone were to get into my personal account, like, okay, maybe I just can't, go out to eat, do X, Y, and Z, whatever the case may be, right? I won't be able to do that for this check. But my bills are paid. So I'm not worried about accruing like late fees, things like that. So because my bills are already paid. So that's why, the security part comes into place, because a lot of times is if you have it all in one bucket, all your money's gone. Whether if you have it in separate buckets and you maybe use your debit card for your personal expenses and you use your bill account just for your bills, you're less likely to get fraud on your bill account because you're not swiping your card at like gas stations and places like that where there could be skimmers. All right, just a quick tip before we move on with the video. So you heard me in the last segment talk about, using my debit card or my account and routing number for payments. So what does that essentially mean, right? All right. So if you use your account and routing number, let's just say you have a loan set up or a credit card set up with Capital One, right? Let's say you pay $100 to the loan, to the credit card, whatever. Capital One on their end is going to show that the $100 was actually processed, right? Or quote unquote pending. But it's going to come out your balance essentially. So that's what you're going to see on your card. Now your bank, though, your bank's not going to have that information yet if you use your account and routing number, because account and routing numbers, those process overnight, right? So those go overnight. So that's what you call an ACH transaction. So what tends to happen is those ACHs can take up to 3 to 5 business days to come out your account. Sometimes they come out next day. Sometimes they come out in 2 days, 3 days. Sometimes they come out next week. It all just depends on, the merchant and how they process their payments. Where compared to your debit card is essentially linked to Visa. So that will show, or Visa, whatever, your debit card is linked to, mostly Visa. But that will show that, it comes out right away, right? So when you swipe your debit card at McDonald's, you swipe your debit card at the gas station, you're going to see that transaction, pending in your account right away compared to your ACH transaction with your account and routing number. So if you are using your account and routing number for payments, just keep in mind that it's showing, paid in, Capital One, but it's not going to come out your account right away. A lot of people mistake that, right? They're like, well, I paid it. I had the money. Well, yeah, you did. But, again, it takes 3 to 5 days to come out, usually. So that's why if you have separate accounts, you don't have to worry about the time frame, because as long as you, get it in by the due date, and as long as you put the funds in there to cover it, it's going to come out when it comes out. And the only thing you got to do is wake up in the morning, check, see when it comes out. All right, so we're moving on. So let's just, so we got our bill account and we got our personal account set up. Now, let's just say, all right, Nick, I got a side hustle, right? Okay. Now, if you have a side hustle, let's just say, you should open up another account for that. So if you have to have 3 accounts, get the 3 accounts. If it's not like an LLC or anything like that, just something you do on the side that you report on your taxes, open up a third account, 110%. I would recommend open up another checking and savings account. This is why you should look to see which, credit unions or which banks offer free accounts, because that's money that you're saving in the long run. I know a $5 fee may seem, small at the time, but think about it, that tends to add up over, years of you banking with that institution. So if you have a side hustle, get a separate account. And here's why. Because when it comes to tax time, it is hell for you to go through your personal expenses and your side hustle expenses. So if you just have a side hustle with a separate account solely dedicated to that side hustle, it makes your life 10 times easier when you go to file your taxes and things of that nature, and keeping track of how much you're paying compared to how much you're receiving when it comes to your side hustle. Never want to mix up your personal and business expenses, because you're going to end up really getting confused, getting lost, and you're just going to see transactions start to pile up. You're not going to be able to track, your credits or things like that, and your debits come out to your account. You won't be able to budget successfully, because when you look at your statements, you're going to have to go through a month's worth of statements just to see what was personal and what was business compared to just having the separate accounts, which makes it 10 times easier for you to track. So if you are going to have a side hustle, business, whatever the case may be, get a separate account. If you have a business, again, there's a lot of credit unions, institutions that offer free business accounts. Don't pay to house your money. That, to me, that doesn't make sense. Why am I going to pay you to house my money, right? So look for the free accounts. If you get a free business account, that makes your life 10 times easier because, again, when you're a business owner, you're looking to cut expenses so you can have a profit, and so that way you can invest that money back into your business to help it grow, right? So in order to do that, these fees, again, they add up. So look for the free accounts, open up the multiple accounts. It's so much easier for you to track. And let's just say in the case you do get audited, because that can't happen, you're going to send the auditor your personal information with your business information all in one account. Man, that's not going to work. That's not really going to work, because then you're going to be doing basically the audit with them to see what's personal and what's business. So it's best just to have that separate account and just to keep the transactions separate. All right, so I'm not really gonna go too long on this segment here, because you heard me throughout the video already mention having a bill account. So again, the pros of having that bill account is not only you're going to be able to pay yourself, but you're also going to be able to have your bills covered and set them up with automatic payments, right? So your bills are going to be covered. You're paying yourself. It's less risk, because if you're not using your debit card, then again, the only way a lot of people can get your account and routing number is A, you give them your online information, B, you give them the account number yourself, or C, there's a data breach. So a lot of times is, protect your bills, right? Because that's the one thing. A lot of these billers, hey, I have fraud on my account. They might say SOL, you still owe us this money on this due date. That does tend to happen. So having that bill account will make sure that your bills are paid. It will make sure that you're not accruing late fees or extra interest on your bills. So that wraps up the episode. So again, I think it's very beneficial for you to have multiple accounts, especially if you're trying to go through your financial journey. Maybe you're trying to turn the ship around, or you're trying to grow your funds, whatever the case may be. Having those accounts is definitely a good stepping stone in order for you to meet your goals, because it keeps you accountable, right? So end of the day, you guys heard me say in my last videos, no one's coming to save us. You got to hold yourself accountable at the end of the day to find, ways for you to grow, if this is the journey that you do want to take, right? So, having the accounts, it's small, but I promise it definitely does help. It saves you a bunch of time. It saves you a bunch of money. Do your research. Don't pay fees for housing your accounts. I don't understand why banks do that, but usually if you go to credit unions, they may offer free accounts. But yeah, that's all for me today. Thank you. Make sure you hit that like and subscribe button. Make sure you share. Really helps out the channel. And I hope you all enjoy the rest of your day.